Hello and welcome to Business Today. You're watching our YouTube channel and I'm Siddharth Zarabi with our made for YouTube daily show, Rajniti. And on today's policy and politics debate, we're going to talk about where India's interest rates are headed. And why is this an important topic? It's important because it impacts your home loan, your EMI for your cars as well, and practically every aspect of the economy. So, what is happening? Beginning the 6th of April until the 8th, a 3-day review of our interest rates and other aspects of monetary policy has started. This is done by a body called the Monetary Policy Committee, and that committee is part of the Reserve Bank of India and chaired by the Governor, Shaktikanta Das. And this is the first time in the current fiscal year, which has just started a week ago, that this bi-monthly review of our interest rates is being conducted. Now, the MPC is very, very important. Not everyone understands the significance of this body. However, moving away from some of the more arcane economic issues, and if we try and focus on what it means for you and me and for business and for India's growth and inflation, this meeting is extremely significant. The last time that the MPC met was in the month of February. And at that time in February, the MPC had taken certain decisions, including keeping the repo rate being the rate at which the Reserve Bank of India lends money to banks, which then lend it onwards, at 4%. And the committee also maintained what is called an accommodative stance. An accommodative stance being a stance where any changes or unanticipated developments that have an impact on the economy, on growth, on inflation, the MPC in a way reserves the right to respond to it and keeps its options open. That's what is meant by having an accommodative stance. And this stance was significant at that point of time. The fiscal year was closing, but no one knew that Russia would invade Ukraine. Practically no one knew. Intelligence agencies in many countries did have some idea, and that is the context in which this MPC meeting is being held. This is the big global context. Now, what are the three key challenges that the Reserve Bank of India is facing? And those challenges have to be met by this Monetary Policy Committee. Various economists have spoken about it, and this meeting, as we know, is coming after a retail fuel price development in India, which is extremely significant. And as we discuss, the first big challenge, which is how will the Monetary Policy Committee manage inflation expectations, I have to bring out this one key fact before you. From November 2021 till around a week and a half ago, petrol, diesel prices had remained unchanged. That was a 5-month sort of abnormal stop to what has been happening for many years in India, which is daily revisions of petrol and diesel prices. And after 5 months, prices have started to rise. Currently, the rise is around 9 rupees. It is expected to continue for a few more days till the petroleum marketing companies catch up with that 5-month gap that has occurred as far as this price is concerned. Now, if you look at the situation and contrast it with what was happening on global crude oil prices, this was the same period when prices had not suffered a shock on account of the Ukraine war. So 5 months afterwards, when we started raising prices, it came at a time when the Ukraine war had sent global crude oil prices into a major spin. That has impacted inflation expectations. The RBI measures inflation expectations through a survey that it does at the household level. And textbook economics tells us that when it comes to inflation expectations, it is very, very important because the RBI has a twin mandate really. The mandate is to control price rise, prevent price rise from becoming unmanageable, as well as supporting, boosting, and ensuring that the country's economy grows. And this trade off, this balancing act, is the single most important part of the RBI mandate, because if this balance is not met, it leads to negative consequences for income, for growth, and for a country overall. And we've seen what has been happening in our neighborhood. Inflation is in fact going up post-COVID across the world, but the combination of low growth as well as high prices has led to political turmoil in Sri Lanka as well as in Pakistan, where the former Prime Minister Imran Khan is being blamed for mismanaging several crucial aspects of the economy. And that is also being said about the Rajapakshas, who practically controlled major portfolios, up to 5 of them between the brothers and a nephew in Sri Lanka. And we have seen the mismanagement in Sri Lanka and how that has brought that proud country almost to its knees as far as its economy is concerned. So the RBI has the delicate task of managing growth and inflation. And in that situation, the second big question is, will a rate hike help control prices? I think what is likely to happen is, because of the fuel price, which is a supply side impact, there might be a decision by the RBI MPC to somehow see through this supply side aspect, because this is not demand-led inflation. It is not more people wanting more and more goods and wanting to pay a higher price for that. It is abnormal supply shock. So we will see whether the RBI chooses to change the interest rates. And finally, all of this leads us to the third major point, which is the GDP growth forecast for the current financial year. In February, the RBI had projected that India would grow at 7.8% in the current fiscal year. The question that several economists are now asking is, because of the recent developments, because of what is happening on inflation, what's happening with regard to fuel prices, and evidence that is being seen that some of the growth that had come once the impact of COVID had gone down, that growth pace is now slowly tapering off. And that leads to some expectations, and we are all watching out for whether the RBI will lower or change this 7.8% GDP forecast. Some people are saying that it might be revised downwards by up to 30 basis points. But that's a premature statement to make really, because the decision of the RBI will come out on the 8th of April, and we will be there to track it. So the big question really, as I end today's episode, is, will the RBI turn? Will it change its stance? Will it go down a different path? And will its attention now conclusively shift to controlling inflation, which hits the poor the most, which hits retired pensioners very, very badly, and move towards a scenario where it says growth will continue, but my priority is to prevent a price rise, because a combination of low growth and high inflation causes stagflation, and that is something that we'll have to be on guard against. As of now, we do not see that happening, but yet there has to be far more focus on this aspect. So that answer in 3 days from now, and I'll be back with those details. Till then, do keep tuning in. Watch, share, like and subscribe Business Today. Bye-bye.
If you like the video, do like, comment, share and subscribe.